if I look at the S&P index, it was about 10% for that time period. It's 13% right now, but we include this massive high 2020 before COVID, about 10%. And I got to figure 7% was monetary inflation, 3% was some kind of productivity or something. That's my best guess. And if I look at it right now, in the past 12 months, we've got 23%, 24, almost 24% on the S&P index. And that means at least 20%, 21% monetary inflation. That doesn't account for the dilution from issuing excessive debt and equities in the S&P 500. So if you allowed for that, then you could make an argument that we've got monetary inflation equal to the S&P or slightly, but we're looking at monetary inflation in the Western world tripling. And if I look forward the next 4 years, there's no circumstance under which you wouldn't consider it's got to go at double the rate it was from 2010 to 2020. So it's minimally 15% a year, I figure. And then logic says between 14 and 22% is the best guess. And I would allow for a little bit of flexibility there. Like I would swear no chance it's going below 14%. No chance. If you're a pessimist, you would say 22, 23%. And if you're an optimist, you'd say 14%. And then you would say maybe, and then you would say that for 4 years, and then maybe we'll get some taper 2024 between 2028, and maybe we can taper from 14 to 12 to 11 to 10. But, at the end of the decade, could we get back to inflating at 7%? Right? That would be success, right? And the catalyst for that would be digital transformation of the economy. Maybe digital, the growth of digital property a la Bitcoin, the digital transformation of everything else, of assets, the digital transformation of products, a massive, we're distorting the economy so much though, that we're really changing the definition of GDP. And maybe even for example, if no one goes to a movie theater ever again, and if we eliminate 90% of business travel, then both of those are deflationary. And we could say we have more business meetings and we watch more movies, but the economy will contract. So I think that will start to come into play. It's like, that's like a hedonic adjustment in a way. Like, it's not that different than your sirloin steak became soy burger, or like meat derivative product, something. But, it's been so long that we forgot that we ever had the other thing. So we don't know to miss it. I think we'll see some of that when you get out more than a decade. That's what makes this really difficult. But I think you want to plug in a number, plug in 14%. If the US inflates at 14%, what people haven't really factored in is that everywhere else they're inflating 20% to 30%. And the question is, what are the consequences? And I think there are two really big trends, right? Which is people are going to snap up digital currency if it's available, as much as they can get their hands on, and they're going to snap up digital assets, a la Bitcoin.
Do you have any tips in general for small businesses, what they should do?
Well, you define your treasury strategy and have a savings account and a checking account. So I would keep somewhere between 1 month to 1 year's cash flows in the currency that most of your costs are denominated in. So if I had liabilities in dollars or Canadian or euros or whatever, I'd keep a balance in those liabilities. And then all the excess capital you have, I'd sweep into Bitcoin. And I'd sweep cash flows in excess of, like, we have a target number. Normally it's like 50 million. And if, I'm always talking to my finance people, are we more than 50 million? Do we have a little bit of extra, and then we sweep the extra into Bitcoin. And then otherwise, if you're a small business, look, if you can negotiate a credit line against Bitcoin, it doesn't hurt to have one. You know, Silvergate Bank gave a credit line and issues credit lines to people like Marathon, the Bitcoin miner, and they can borrow money against Bitcoin. So if you have a credit line against Bitcoin and you can establish a banking relationship, at some point that could be interesting. The other thing is, if you're in an inflationary environment, once you've adopted a Bitcoin strategy, you have a use of proceeds for capital. If you didn't have a use of proceeds for capital, then selling equity is dilutive. But if you have a use of proceeds for the capital that actually has a higher theoretical return than the growth rate of your business, then selling equity is accretive. Like MicroStrategy sold equity. You saw just this week, I announced we sold $82 million of equity and we bought $82 million of Bitcoin. Now, for 20 years, we didn't really sell much equity. And the reason why is we didn't really need the capital, so we'd just be diluting our EPS and diluting our cash flows. But if your small business is going to grow at 10% a year, and you think Bitcoin is going to grow at 40% a year, then if you sell equity at a fair price and you convert it to Bitcoin, then in fact, you're actually strengthening your balance sheet and you're increasing the growth rate of your business, right? You just quadrupled it, right? In theory, if you basically sold equity equal to your entire company and put it in Bitcoin, you just did a merger with a company growing at Bitcoin rate 160% a year with your small business growing 5% a year. Okay, so that's MicroStrategy did that, right? We took a $500 million company with $500 million in capital growing 0% a year, and we turned it into a $500 million company growing 5% or 10% a year with $6 billion of capital growing 160% a year, right? So that's the Bitcoin strategy. So I think small businesses, if they can raise equity or if they can raise debt, like if I was a doctor's practice or a dentist practice or a restaurant, you know, if you could borrow money against that at a reasonable term and convert it to Bitcoin, I would do that. I would finance my equipment. I would finance my real estate. I would finance my cash flows, and I would do it with any combination of debt or equity. Now, the caveat here is anytime you do a financial transaction like that, you got to find a counterparty you trust that isn't a vulture, right? I mean, you could do an equity raise where you thought you were getting a good deal, but they insert a clause that says, if you don't show up to work on Tuesday, we get to seize your business and everything, you know? So, and I once borrowed money to lease some computer equipment, and I thought it was good terms, like 6% or 4% interest. And when the lease came due, there was a clause in the lease that required that we return all the computer equipment with all of the plastic face plates in perfect order with the serial numbers intact. And the face plates were worth like 15 cents. And they'd been removed like 3 years earlier and thrown away. And so the bank basically tried to hit us with like a $4 or $5 million penalty clause, which would have tripled the cost of the lease, because on page 98 of the lease, we were supposed to return a 15-cent faceplate with a $3,000 computer. So my caveat here is, assuming you know how to do these equity transactions and assuming you can borrow the money from someone you trust that is not a loan shark, then you should take the capital and you should buy Bitcoin. If you don't know how to do that, you're in over your head, right? You'll probably just hurt yourself.